Hello and welcome to a new episode of Ask the Expert. Today I've got Sandeep, the co-founder of Dezerv. This guy has 20 years of experience and has managed more than 50,000 crores in mutual funds. The format of the show is very simple, okay? Our viewers have sent us questions regarding mutual funds and investments.
Sure.
I try to help them in my own capacity, but बहुत बार I need help of experts like you, और इसलिए मैं आपके पास आया हूँ. सबसे पहला क्वेश्चन है आकाश गुप्ता का. He is a 26-year-old software engineer, and ये एक ऐसा क्वेश्चन है जो बहुत लोग जानना चाहते हैं. How to decide number of mutual funds? Is choosing mutual funds based on past data the right approach?
हमने ये देखा कि we went back 15 years and looked at the funds which have done really well. उनका 3 साल का आउट परफॉर्मेंस हमने एक लाइन पे ड्रॉ किया और दूसरे लाइन पे उन्हें अगले 3 साल कैसे किया. वी लुक्ड एट दैट, राइट. Logically, the assumption is that there should be a correlation. What did well in the last 3 years, fund managers very good, should also do well in the next 3 years. But unfortunately, there is no correlation.
Okay.
Yeah.
Let's say you said 15 साल का डेटा देखा है, ठीक है.
बिल्कुल.
हर 3 साल के जो आपने बकेट्स क्रिएट किए हैं,
हाँ.
जो पिछले 3 साल के बकेट में टॉप परफॉर्मर है, उसमें से कितना परसेंटेज फ्यूचर वाले 3 साल के पीरियड में भी आउट परफॉर्म कर पाता है?
Less than 40%.
Less than 40%.
You know, there are, to my mind, there are 24-25 metrics, but I'll simplify it and tell you one thing. Every fund manager has a certain bias or a certain style, right? We have to figure out what market environment does that style do really well in. For example, if I have a value style of investing, more often than not, if interest rates are high, I will do better. Whereas if I had a growth style of investing, I would do better when interest rates are low. Number two is that there are some basic things, right? What is the size of the research team? Does the fund have the capability to be able to analyze every stock they are investing in? Do they have the depth? Does the team have experience? All of that are softer aspects.
Yeah.
The first thing is, in various market environments, how do various fund managers do?
Got it. The next question is by Saubik Das. He is a 37-year-old PMO. My current mutual fund portfolio is giving me 14% XIRR and I have 10 mutual funds. Do you recommend adding a new one or step up with the existing one?
So, first of all, 14% is a great return, but also we have to know this is past return, right? And we just talked about how past performance has no bearing on future performance. So I think every time we decide to add or remove a fund, we have to look at the portfolio in a fresh way, right? So I think I would suggest to him that he should probably sit down, analyze his full portfolio and see what are the overlaps in the portfolio. What is the large cap, mid cap, small cap allocation? Is that something that he is comfortable with? And then also look at the style of the fund manager and see whether it is suited to the current market environment. Unfortunately, not an easy answer, but is some work for him to do.
Okay. I'll try to make it easier for
Sure.
Saubik. What are some of the red flags
Yeah.
that he can identify in his portfolio while assessing it?
So he can look at 4 areas, Anshuman. First is to look at how has these fund managers done relative to the market in the same period of time. Secondly is to look at diversification and see whether do I have assets in every category or not. Do I have enough in large cap, or am I underexposed to large cap, and so on and so forth. The third is to look at the volatility of their portfolio. कि क्या मेरा पूरा पैसा equity में लगा हुआ है या मैंने debt में भी लगा है, because if markets go through a downturn, will I be able to handle it? And fourth is to look at investment discipline. कि am I doing investments at periodic intervals or am I doing lump sum investments and then forgetting about my portfolio?
Yeah, I'm going a little off topic, but I think a lot of us want to know. For most people who are under the age of 30, this is our first recession.
Yeah.
You just said 2007 में hot था, and then all of us know what happened in 2008.
Yeah.
What is the economic climate in those first 2-3 years during a recession?
Fortunately or unfortunately, we haven't seen a deep recession in recent time, right? जो COVID में हुआ वो भी short-lived था. Market also bounced back very fast, right? What happens during a recession is all of that negative news comes. At the same time, I look at my portfolio and that's also doing badly. So that can create a fear psychosis. उस time पे बहुत डर लगता है. What do people do at that time? I have seen the highest net worth individuals who have portfolios of 25, 50, 100 crores say that I want to redeem everything and put everything in fixed deposits at that point of time, right? Now, fixed deposits are not bad. A part of the portfolio is right to have. but to redeem your entire equity portfolio at the bottom of the market, because we are not able to handle volatility. So one thing, preparing for a recession in any portfolio is very important. And how do you prepare? Think about what if the market goes down by 25%. If you have a portfolio of say 10 lakh rupees, आपका portfolio 2.5 lakh rupees कम हो जाता है, how do you feel about it? And if you feel really nervous thinking about that number, then maybe you should have more debt in your portfolio. So going into recession or thinking about recession, plan for how much downside you can tolerate.
Just think about it one thing. जब भी कोई ब्रांड का सेल होता है, आप ज़्यादा खरीदते हो या बेचते हो? You always buy more, right?
Correct.
Think of this situation. Like right now, we are almost at an all-time high. But in a general recession, when the markets go down, if you have money, think of buying more and averaging down your cost price. That's what you should ideally do. And do you have the app on your phone?
Absolutely.
You have it?
Yeah.
Okay. And do you check it regularly?
No, not as much.
Okay.
Because I think checking the portfolio too often also can lead you to make bad decisions. Maybe now I've seen multiple market cycles, so I don't check it that actively. COVID में काफ़ी active हो गया था. Everyone had more time, so we were sitting at home. क्या करें? Portfolio check करते हैं.
Yeah.
But lately I don't do it. And frankly, wealth creation happens in the jobs that we do, right? We have to daily basis पे जो हम काम करते हैं, self investment करते हैं, how we grow ourselves actually makes a bigger difference to our wealth. So we should focus on that and let somebody else focus on growing.
There is also a report in which a study conducted in USA which said that almost 60-70% of the millionaires in USA made money because of a business.
Yes.
Right?
Yeah.
But the current notion, and because of the last 2-3 years there has been so much content, people are just assuming कि trading or investing से अमीर बनेंगे.
हाँ. See, I think there is two parts in our life, Anshuman. एक तो होता है जो हम कहते हैं wealth creation, और दूसरा wealth preservation, right? अब मेरे लिए wealth preservation is growing my money at 10 to 12% consistently over a year.
Yeah.
Now somebody says 12% तो exciting नहीं लगता. But actually 12% means that if I have 100 rupees, it will become 200 rupees in 6 years.
Yes.
The rule of 72,
Yeah.
right? But the moment I say 100 will become 200 in 6 years, people sit up and take notice, right?
Yeah.
So I think first of all, wealth preservation is something that we should let somebody else do. Wealth creation is our job. How do we create wealth? By doing better at what I do in my daily life, right?
Yes.
So if I am a professional, I need to invest in myself and grow my skills so that I can earn more. The best hedge for inflation is investing in yourself, right? Because अगर आप काम अच्छा कर रहे हो तो आपका salary will grow above inflation. If you are just doing what is expected of you, then you will grow in line with inflation.
So focus on your active income, focus on your day job, whatever you're doing, and then whatever extra you're making, just keep investing to preserve wealth. The next question is by Mayank. He's a 25-year-old software engineer again. I think हमारे videos सिर्फ software engineers देख रहे हैं.
And they are making a lot of money, clearly.
They are making a lot of money. This guy is asking, since I'm working remotely and live with my parents, most of my income is getting invested. But my dad wants me to also invest in real estate. I might be able to take a loan of 80 lakhs, but is it worth investing? Or should I increase my investment to 1 lakh per month instead? So he's asking, real estate में invest करूँ कि अपना normal investment को 1 lakh per month?
So let's break up the question, right? पहला तो real estate versus equities. I'm assuming equity funds and so on. And secondly, whether to keep a loan and invest or not to keep a loan and invest, right? I think I would break up this into two parts. Now, real estate versus investment. I think one thing to know is that sometimes we take emotional decisions and for the right reasons, right? If it gives you and your family the extra space, the right comfort so that you and your family can have a better life, then maybe investing in real estate is not a bad idea, right?
Yeah.
Because not every decision can be looked at purely from a financial perspective,
Exactly.
right?
Exactly.
We live for a reason, we live to have a good life, and sometimes it's helpful to have our family and us in a good headspace. Number two is, however, if it's purely for a financial investment, I would advise him to think of one area, which is that you're investing all your 80 lakhs into one real estate investment versus investing that amount into a diversified mutual fund portfolio. What is the risk of putting all my eggs in one basket is that if that area does not develop, or something happens to that building, or the title of that area is not right, then there are many challenges that I can face. So purely if I'm putting a large part of my net worth into one single asset, I think that's not advisable. Now the third part, which is मैं loan लेके करूँ कि so ideally I would think that interest rates are relatively high today. Sometimes having a loan plays on your mind. It does not give you the flexibility. So I would be in the camp that at least a large part of the property should be paid by your own capital, and some part you can take a loan for tax benefits and other reasons, right? But to borrow and invest may not always be the best thing to do.
I hope, Mayank, you got your answer. The next question is an interesting one, and I want to hear your take. This is a 28-year-old SDE. His name is Varun.
Another software engineer.
His question is, I have got a 54 LPA job offer. Is it enough for survival in Bangalore?
I think that's a first world problem to have. 54 lakhs is a fantastic income. It's probably likely that you'll make almost 35 lakhs plus on a net of tax basis. You must have really extravagant needs to be worried about this point. Otherwise, I think this is very sufficient. Rentals are expensive in Bangalore, but still you can afford a decent rental in this. And given that most of us don't spend that much on our daily lives, I think this is not a bad number to have in your hand.
Yeah, but this question actually, is a reflection of the current age that we are living in. Okay, right now there's a lot of pressure to achieve financial goals at a very early age. Mayank at 25 is asking, should I buy a house? 28-year-old Varun is asking, is it enough for survival? Why is this happening, and how to curb this feeling? Because I'm 25 right now. I have max risk appetite because I don't have any loans, no liabilities, and I'm constantly trying to save money so that I can bet on the next big thing. How to curb that feeling that others are having?
So I can only give the context from my own experience, Anshuman. So when I was in a similar age, we did not have social media. It seems like ages ago, but Instagram wasn't there at that time, right? And as a result of which, I did not know how others were spending their money, right? So our expectations stayed low. Today what is happening is we are in an environment where we are bombarded with other people's spending. We are getting to see so many people and we don't know their context, right? उन्होंने loan लेके खरीदा है या उनकी earnings से खरीदा है, we don't know, right? So sometimes I think it will be helpful to switch yourself off from looking at other people's spending. The one thing which is important to know is that how wealthy you are is not defined by how much assets you are able to display, right? In fact, if you're buying a 25 lakh rupee car, you have 25 lakh rupees less in your account. So you're poorer by that much, not richer by that much, right? So I think that's something for us to keep in mind. And if we do that, I think some of these compensation packages are very attractive.
One more thing, right? Do not compare yourself with the societies. Do not follow the societal norms. Everybody has their own definition of a wealthy life, a peaceful life. You have to define those assets. You have to define your parameters कि हाँ मुझे साल में अगर 2 महीने काम नहीं करना उसके लिए मुझे इतना सेव करना पड़ेगा. But that will come at the cost of not buying a car. You are still rich. So don't let society define wealth for you. The next question is again by an IT employee. He's 23-year-old Harshit Reddy. By the way, girls who are watching our videos, please send us questions, ठीक है? इसमें सिर्फ लड़कों के questions है. We want you to participate, okay? And every girl who is sending us questions will definitely try to, include it in our next episode. That's a humble request. The question is, I have parked my money in a P2P platform. Till now, it's been more than a year. I'm getting regularly 12% interest. But my concern is it safe?
Okay, look, the first thing is whenever you're investing in alternative assets, you have to figure out whether that asset is regulated. Now, fortunately, P2P is a regulated asset. RBI regulates P2P. So that's one thing to know. The second thing to know is that in no situation should I have all my eggs in one basket. Not all my money can be in one asset class. And in this case, if that is the situation, I would advise this person to diversify from that one asset class. The third thing is now, 12% return on a fixed income product is a high return, and high returns are equal to higher risk, right? And that is something that we should keep in mind. So you have to account for the fact that there is a possibility that sometime this money may not be able to return the same rate of return. So I would say strongly advise, please diversify your portfolio. Mutual funds are a great starting point. Long term, I think Indian equity funds will do better than 12%. Also to note, this 12% is fully taxable as interest income, which is not the case with equity mutual funds. So my humble recommendation would be to take some money from here and put it into equity mutual funds.
All right, Sandeep, thank you so much for doing this. I'm sure, like, I have sold mutual funds in the past, but आज मुझे भी थोड़े बहुत insights मिले. Thank you so much for your valuable time. And do make sure to check out Sandeep. Are you on Twitter?
I'm on Twitter, I'm on LinkedIn.
बस दोनों में follow कर देना. The link is in description. And if you want your questions to be a part of the next episode, ठीक है? Comments में डाल दो क्या क्या questions है. Like, share, subscribe. Thank you so much. Goodbye.